This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on December the 7th, 2012. Our time is 8:46 Mountain, 10:46 Eastern. Radio show runs AM 640 in Toronto, QR 77 Calgary, 630 Chet Edmonton. And we should mention, starting next week, we will not be on AM 640 in Toronto anymore due to circumstances beyond our control. But the good news is, everyone who has listened to our radio show in the past, you can continue to listen through HESradio.com, rarecoloreddiamonds.com, and our podcast through iTunes, which you can have on your smartphone, your iPad. This show is portable. You can listen to us anytime you want at your convenience. You don't have to listen at a specific time. So for those that are listening in Toronto, we will not be on AM 640 anymore, but we can tell you the show will continue on in Calgary and Edmonton. HESradio.com, rarecoloreddiamonds.com, our podcast through iTunes. Please listen to us through those sources. As we start our show today, job numbers out of the United States, and the stockbrokers are spinning. I heard a good story on my way into work today. The U.S. economy is just booming along. 146,000 jobs were added. It beat the expectation of 85. Obviously, the bar very, very low due to Hurricane Sandy. The unemployment rate went from 7.7 to 7.9 to 7.7. But the big number was that 540,000 people dropped out of the workforce. They have stopped looking for work. That means in total now, there are 89 million people in the United States out of the workforce. If it keeps going that way, you're going to have zero unemployment because no one will be working at all. But these are the numbers that get spun by different people, and you have to look beyond the numbers. And it's very important that you do that. Obviously, the fiscal cliff, Harold, it looks like they're heading over the cliff. And even if they do get some sort of deal, the truth of the matter is, when they're talking about saving $1 trillion, they're talking about it happening over 10 years. They're still going to be running $1 trillion deficits for the next 5 to 10 years in the United States. And monetary policy is going to remain the same, very bullish for precious metals. But what's happening today with the job numbers, a farce, and the fiscal cliff, is it any surprise the politicians in the states can't get it together? I'm not surprised. I know you're not surprised either, Harold.
No, I'm not at all. In actual fact, it's almost like a joke. To see the numbers come out, but they don't broadcast, again, the numbers of people that are really not working or that has dropped out of the workforce. So there's huge concern in the United States. There's so many money managers that are so concerned about this tax situation at the end of the year that a lot of people are talking about getting out of the United States. People that are handling money for all this time are extremely concerned because this tax hike could really destroy the stock market. And again, we could see stocks plunge by 20-30% or more if they don't come to some solution with this fiscal cliff situation. So all in all, the markets have been extremely volatile. What you saw is that gold over the last couple of days has been extremely volatile. In fact, on Thursday, the gold market was down as much as $20, $25 during the course of the day, came roaring back at the end of the day, and actually finished up on the day. Now on Friday, as they were waiting for the job numbers to come out, gold was down all the way to $1,682. There's very heavy support in gold at $1,680. The market hit $1,682, bounced off that, and is now trading at $1,706. So basically the market has come back and made about a $20 move or more this morning in gold. Similar situation in silver. Silver traded down as low as $32.54. Heavy support at $32.50, and now the market's back up to $33.39. So we've seen about an 80-cent increase in the price of silver. That's how volatile the markets have been at this particular point. Platinum's trading up at $16.09. Palladium's trading at $700. Now, the reason that the gold market, in my opinion, has been so volatile over the last few days is primarily because of the relationship between the U.S. dollar and the euro. The euro has been falling because the situations with the sovereign debt situation in Europe are not getting any better. It's been like this for, basically like this for the entire year, and there is no advancement whatsoever. So the U.S. dollar is back up over 80 cents. Not that that's a strong U.S. dollar, but basically that's a psychological number. When it gets above 80 cents, the fact is that the gold market tends to sell off. But the gold market came back very, very strong today, and it was down as much as $20, $25. This is 2 days in a row, and the market has come back extremely strong. U.S. dollar is a doomed currency. There's no doubt about that. These are temporary situations in the market, where the market is trying to find direction again. But the U.S. dollar, or the relationship between the U.S. dollar and gold, has always been extremely important. Now you've got gold rallying, even though the dollar has rallied over the past couple days. Normally that would happen at the tail end, when they're going to start to raise interest rates tremendously, but we've got the opposite situation. Interest rates are going lower and lower and lower, and again, that's going to push the U.S. dollar substantially lower. Once we get over this situation with the sovereign debt situation in Europe, the U.S. dollar will continue its decline. And again, what we do feel is we will see, again, an attack on the 72.50 level, which is the low that we saw back a few years ago when gold actually hit its $1,900 level. Once it breaks that level, the market could literally free fall and fall down substantially. So again, the relationship between the U.S. dollar and the gold market is extremely important, and when the gold market tends to sell off, it's primarily because the U.S. dollar is building up strength. We do not believe that that is a long-term trend in any way, shape, or form. And again, with the tremendous amount of dollars that are being printed, it basically ensures us that we will see the U.S. dollar fall to the levels that we predicted. So again, at this particular point, I would be a major buyer and holder of physical gold and silver. There is no doubt in my mind which direction these markets are going in. This has been an extremely choppy year. It's been a disappointing year in the sense that we didn't hit necessarily the numbers that we thought that this market was going to hit. Being an election year, that had an awful lot to do with it, but we felt that after the elections that we would feel that investors would think the same way as we do, which is we saw 4 years of the Obama government, and we saw what happened to the price of oil and to the price of gold and silver, and again, you would think that that would be the same scenario, and I'm positive that that is going to happen. It's just, again, at the end of the year, you've got this jockeying for position, you've got them playing with numbers to make the markets look better than what they are, but there's absolutely no doubt that the U.S. dollar will continue to fall because they're printing so much money, and it's an action-reaction type of market. The action is printing money, the reaction is the dollar's going to fall because there's going to be way too many dollars out there, and we know that with this quantitative easing 3, that there's absolutely no way that they're not going to print at least another $1 trillion, and the fact is that that'll push the U.S. dollar down substantially. So you've got a good rally today in the gold and silver markets, and again, that happened on Thursday also. And again, we started off the days with the markets down substantially, and now the markets come back very strong. Again, we're back up over the $1,700 level in gold, and we're above the $33 level in silver. The heavy support levels for gold are 1680, which we came very close to on Friday morning, and again, the market bounced off there. There's very heavy support at 1600, and again, the market could go to $1,600 gold without being damaged on the downside at all. The silver market, there's very heavy support at the 3250 level, but the major support is at $30. So again, it is possible that the market could drift a little bit lower without hurting its long-term bullishness, and again, we are still extremely bullish on the gold and silver market. The other market that we're extremely bullish on, which has been extremely choppy also, has been the crude oil market. There's so much happening in the Middle East at this point that is concerning. And the bottom line is that the crude oil market should rally very, very strong. Now, we didn't see this year so far the fight between Iran and Israel that was supposed to happen this year, but again, at this particular point, that did not happen. But that's not the major reason why we're bullish on on oil. We're bullish on oil because there is literally shortages in the oil market, and we do feel that the need for oil is going to pick up in the first quarter and second quarter of next year, and it should push oil prices substantially higher. I'm a firm believer in the price of crude oil, and I believe that within the next year to 2 years, we will see oil prices approaching the $200 level. Right now, the price of crude oil is trading at around $86.50. So again, obviously, $150 to $200 oil would be a tremendous move in that market. So all in all, really nothing has happened in the market. It's coming close to the end of the year. The trading is going to start to fade off a bit as we get closer and closer to the Christmas holidays. People tend to take off at that point. And again, we do anticipate that the markets will be, choppy and somewhat volatile because the volume in the market will fall off substantially. But again, what we need to look at going forward into the next few years is what is going to happen to the inflationary markets. And there's absolutely no doubt in my mind, and people that are brilliant in these markets feel exactly the same way, that if you own physical gold and silver and you're not trading in and out of the market, which again is something that you don't want to do, you just want to buy it and hold it. At this point, there's just way too much volatility in the market, and you just want to sit back and let the market regain its trend. And the trend for this market is substantially higher. There's just absolutely no way in the world that I would see that this gold and silver market would not rally over the next 4 to 5 years just based on the huge amount of dollars that's being printed, which will lead to massive inflation. I know this is something that we talk about every day, but this situation is not going away, and that is a major reason why you want to be out of the stock market and basically into the hard asset market. We had some clients come in from Denver over last weekend, and they came down to attend a car auction, and they were looking for to regain their youth and buy some Camaros, which was the first car that my client really drove as a teenager. And they were the experts at the auto auction said that this particular Camaro would sell in and around the $80,000 level, and it ended up selling for $180,000. And almost every classic car that went up for sale at auction sold for 2 or 3 or 4 times what the estimates were. Now, that's the exact same thing that is happening in the diamond market also. And basically what it tells me is that investors out there want the real asset. They want to hold on to their assets. They don't want the paper assets that they've gotten killed in over the last 4 to 5 years. Don't forget 2008, when the markets plummeted and took away everybody's money. And now it's taken till 2012, 2013 to get somewhat back to where you started, and now you've got this fiscal cliff coming up, and you've got these other landmines that are so devastating and could affect the market in such a huge way. I don't see any reason at this point why anybody would want to take the risk and keep their money in paper assets when you've got this fiscal cliff coming that could destroy the markets over the short term. And number 2, you've got these derivative markets that could absolutely destroy the markets. The derivative market, in my opinion, is the biggest fear out there. It's even bigger than inflation. It's bigger than this fiscal cliff. It's bigger than anything out there. It's in the quadrillions of dollars. Most traders don't even understand how these derivatives work, and that's one of the major reasons why Lehman went out of business in 2008, and it almost destroyed the financial markets as we know it. Why in the world, when we work as hard as we do, and we've had some success, and we want to put away some money, why in the world would we want to keep our money in an asset that is so dangerous and so volatile that we saw in 1999 when the NASDAQ went from 5,000 down to 1,000? In 2008, we saw the Dow Jones go from 14,000 down to 6,500 and take away everybody's money. It makes no sense to take the risk at this particular point. What the experts are recommending at this particular time is to be in hard assets, assets that you can hold into your hand, assets that you actually own, not like a paper asset like a stock or a mutual fund that could plummet like it did in 2008 and 1999. Now's the time to be conservative and smart. You work way too hard to give away your money again. And if you're in your 50s or 60s at this particular point, you cannot afford another hit like the 2008 markets where the markets plummeted by 50%. There are assets that can offset that. For example, gold and silver during that time, if you remember, when in 2008, when the initial market plummeted, gold and silver fell with it, but they came back so quickly and made brand new highs and hit record numbers. That was because of the major sellout in the paper asset market. Why in the world would we want to do that? There are certain diamonds that when the stock market went down 50%, they went up 50%. So it had a negative correlation to the stock market. You know, every market has its time. This is just the time for hard assets. It's been proven at all the auctions that are going on. The car auctions, the art auctions, and the diamond auctions are raking in fortunes. And again, people are paying way more than what the prices, you know, are predicted that they would sell for. The same thing in the gold and silver market. We're going to wake up one day and see gold up $100 to $200, silver up $1, $2, $3 on a day, and the oil market up $40 or $50. Those days are coming, and they're coming a lot faster than we believe it's going to come. Again, now is the time to be conservative, to hold hard assets, to pay down your debt if you can, keep a little bit of cash on hand. But my strongest recommendation is get out of paper assets before this fiscal cliff fiasco happens. If it does happen and you're in the market, again, you're going to see what the results are, and they're not going to be pretty. It just doesn't make sense. You're better off sitting on the sidelines than you are keeping your money in paper assets at this particular time.
Worldwide Precious Metals is a Canadian company out of Vancouver. Harold recommends Worldwide. That's the only company he recommends you use when it comes to investing in gold, silver, platinum, palladium. They have been through the entire over 10-year bull run in precious metals. When Harold started doing the show after 2001, 9/11, they were there, and they've been there all the way through this bull market. They are the experts. Now, back in those days, you had a scenario where there weren't a lot of companies around helping people get involved in this hard asset market. In fact, it was very rare to see and hear somebody like Harold go on the radio and make bold predictions, as Harold did, about gold and silver. Now, obviously, as this bull market has gained traction, you've seen more and more people get involved and start up companies. But remember, Worldwide was there at the very beginning. They have been through all the ups and downs. They are the experts in this very specialized market, and that's who you want to deal with. Give them a chance to earn your business. They're there to help you maximize the profit, minimize the risk. And remember, this is a liquid asset you can buy and sell with a phone call. Their telephone number, 1-866-623-2002. The website is wwpmc.com. We have a free weekly newsletter we send out via email free of charge every week. You can go through it on your iPad, your smartphone, on your computer. You can print it off if you want to. You can go through it in 5 minutes, or you can spend hours. It's up to you. But we want you to be educated about what's happening with the financial markets. As Harold touched on, you're out there working 50, 60, 70 hours a week very hard for your money. Now, the question is, you want to protect that money, and you want that money to grow. And we believe the hard asset market is a must-have in any portfolio today. 1-866-623-2002, the website, wwpmc.com. In our newsletter, we have a quote from Richard Russell. He was interviewed by King World News. I'll just hang on to my gold. And as the various junk fiat currencies fade into history, gold will shimmer and shine brighter. In its long 12-year bull market history, gold has provided we gold bugs with plenty of scares. But right now, I'm more worried about the Yankee dollar than I am about gold. That from Richard Russell, who has written the Dow Theory letters for over 50 years. He is in his mid to late 80s. He has really seen it all. Also, James Turk, gold expert, gold and silver expert, Gold Money, said, on a day like today when the metals are getting pounded by the cartel, he's one of the people that believe there is manipulation in the market. It's important to step back and look at the big picture. And the bottom line here is that we have some tough times coming up. We need to prepare for it. And, of course, the best way to do that is to accumulate physical gold and silver. The reason they're attempting to make gold and silver look weak here is because these monetary metals will provide the foundation when the monetary system is eventually reconstructed, and the price of gold and silver will be far higher than the numbers that are painting the tape today. But before that day comes, they need to shake as many people out of these markets as possible so they are victims of the greatest wealth transfer in history, not beneficiaries. And that is very important to remember. You have to have a long-term view of these markets. We know we're right. Without a doubt, we know we're right. It's just a matter of the timing. Also, Robert Fitzwilson, money manager, a financial expert, 40 years in the business, saying investors need to do what the powerful are doing, and that is to acquire physical gold and silver. That could very well be a moment in the not-too-distant future where that option is gone forever. Great article in our newsletter, Get It. Billionaire Eric Sprott saying gold is going to rise 500% from current levels. And on top of it, he believes the decade that we're in will be the decade of silver. He is very, very bullish on silver. One of the top stories we have, gold will erupt to as high as $3,000 to $5,000, according to a Bank of America executive. But bullion is nowhere near the inevitable blow-off phase yet, he told CNBC. First and foremost, you have to remember we have been rallying for over 10 years now in gold, and we have yet to see any kind of long-term speculative blow-off phase, says McNeil Curry, Bank of America Merrill Lynch, and this was in a November 30th CNBC interview. Historically, when you have a secular bull trend, they tend to go in three phases. First, it's disbelief. The second is effectively people start to embrace the trend, and the final phase is when everybody clamors on board and they can't get enough of the yellow metal and pushes it substantially higher. We haven't seen any kind of psychological furor like that as of yet. So, well, we've been in this range of 1,900 to about 1,500, that trading range. We do think the ultimate, we have to break through higher as the speculative furor starts to pick up. To be clear, we are not anywhere near that of yet, and we are still in the range. But as we start to break out, one would expect the public and official interest to pick up in gold, and he is predicting that we will see long-term $3,000 to $5,000 an ounce. And next year, or in the short term, they believe we could take a run to 2,000 very, very easily. And Harold, I don't disagree with, we have about a minute left here, Harold. I don't disagree with those numbers. Short term, obviously 2,000 to 2,500. Longer term, $3,000 to $5,000 an ounce. You bet.
The important number to break through in gold right now is $1,800. Even though the high was $1,921, the important number right now is $1,800. You know, we're close to that. We're sitting at $1,700. You could see gold move up $100 in a couple days. So to see gold break above $1,800 would be no big deal. But right now you're just trading within a range, and we need to see it break above $1,800. The same thing with silver above $36. So, you know, we see a break above silver in $36. We get a break above gold at $1,800, and then the markets are going to break loose. And again, there's major buy orders in the market above those levels in the futures market. There's just no doubt in my mind that we're going to hit these numbers. It's just that this year was just one of those years with the elections and all the confusion and everything. The market just didn't perform the way it should have. But again, it's still very strong and looking excellent in my opinion.
Gold and silver are still very positive on the year when it comes to making money. WWPMC.com and the telephone number 1-866-623-2002 to connect with Worldwide Precious Metals. Start your own precious metals investment account today. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping our show on December the 7th, 2012. Our time, 9/11 Mountain, 11/11 Eastern. Radio show runs AM 640 in Toronto, QR 77 Calgary, 630 Chet Edmonton. A note to those that listen in Toronto, and we have a lot of people that listen to us in Toronto. Due to circumstances beyond our control, our show will no longer be running on AM 640. But the good news is you can listen to our show every week. It will continue on in Edmonton and Calgary, and you can listen online at rarecoloreddiamonds.com and also HESradio.com. We have a podcast through iTunes, World Financial Report on Radio. You can type it in and find the podcast. You can subscribe to it. I know I was listening to our show. I was showing my mother how to listen to it on her iPad. We listened to it on the iPad. I've listened to it on my iPhone. You can listen to it on, I have a PC laptop that has iTunes on it. You can also go to Harold's website. If you have a Mac product, you can listen to our radio show. If you live in Toronto, the show continues on. We are just, due to circumstances beyond our control, leaving AM 640 and going on to the Internet in that market. So please remember rarecoloreddiamonds.com, HESradio.com, and you can connect with us as well. Very easy to find on iTunes. To invest in precious metals, and I know Worldwide Precious Metals will continue to keep in close contact with all the great folks and clients they have in Toronto. Speak with them at 1-866-623-2002 to invest in precious metals. Their website is wwpmc.com, and get our must-read newsletter every week. You can go through it in 5 to 10 minutes. You can go through it on an iPad, smartphone, on your computer, print it off, whatever you want to do. You can spend hours if you want or spend minutes, but it's important you keep up to date and have the companion to our radio show, the World Financial Report on Radio newsletter. So connect with Worldwide, wwpmc.com, 1-866-623-2002. To speak with Harold about diamonds, rarecoloreddiamonds.com. Rarecoloreddiamonds.com is his website. The telephone number, 1-800-432-1022, 1-800-432-1022. And this week, Harold's son, Jonathan Siegel, has written a great article on rare-colored diamonds. We have it in the newsletter. It's going to be in Luxio magazine. It's a must-read, and we have it in the newsletter. Take a look at it. This week's featured diamond, which you can find on Harold's website in the newsletter as well, is a 2.15 round, brilliant cut, D-flawless white diamond. It's a triple X, as they call it, and it is an absolutely stunning diamond. You can see it online, and you can see the video online as well. Harold, this is a stunning, stunning diamond.
You better believe it, Randy. It is so magnificent, and that's one of the diamonds that, as I mentioned earlier in the show, is negative correlated to the stock market. When the stock market fell 50%, that was the type of diamond that went up 50%. And to get one over 2 carats, that's a D flawless, D meaning colorless, believe it or not. So, on a diamond like that, you can pretty well see directly through it. It's just an amazing diamond. The round brilliants are the very rare cuts. It's triple excellent in every category. You just couldn't get a better clear diamond than that one. And again, only one diamond in 15 million is over 2 carats, and I can assure you, none are like the ones that we're featuring this week. So again, not only do these diamonds do extremely well for you financially, they go up by at least 25% a year, but when the stock markets and the markets get into trouble, this is a market that can hedge you against what your stock portfolio is doing. If you had $1 million stock portfolio, and you had $1 million diamond, which, by the way, a 5-carat D flawless round triple X diamond is around that price, that would basically hedge you against anything bad happening in the stock market, because in 2008, when the Dow fell by 50%, these were the diamonds that went up by 50%. So again, that's extremely important for those that don't want to sell their stock portfolios because of tax reasons or whatever the reasons would be. I think that the stock market is the riskiest place to have your money at this particular point. But if you have to have money in paper assets, you should own the type of diamond that's going to hedge you against all these potentially horrible things that are coming up. The fiscal cliff, the derivatives market, all the scenarios that could drop the markets down substantially. It would behoove you to own a diamond that would offset those, just like gold and silver and diamonds will offset inflation. A diamond will offset a big negative drop in the stock market. So there's many diamonds that we carry. We carry red diamonds, which are the rarest diamonds in the world, but they sell for about $2.5 million a carat. That's not necessarily the type of diamonds that all of my clients can afford. In fact, most of our clients invest under $100,000 in diamonds, and again, there are many diamonds that are still extremely affordable that you could do tremendously well with that are not in the multi-millions of dollars. Now, the D-flawless whites, for example, they start in the $60,000 to $80,000 range. They're not for everybody. That's an awful lot of money, and a lot of people don't have that type of money. But for those of you that do, this is one of the best investments that you will ever make. They never, ever fall in price because there's so few of them available. They double every 4 years at least in value, and again, during times of high inflation and during times of negative stock market situations, these are the assets that will go up the most. And there's no volatility and there's no risk to them because there's so few of them, they never, ever fall in price. So again, when you look at an asset, when you look at something that you're going to put your hard-earned money into, you've got to weigh the risk and reward and make sure that you can handle that. Well, the rewards for these type of diamonds are astronomical and the risks are non-existent because there is no risk to them. They never, ever fall in price. The only risk to owning a diamond would be, how in the world do I sell it? And we own H. Siegel Fine Auctions, which is the only secondary market that resells these diamonds, and we built that for our clients. So, again, there's no risk in owning a diamond, and it's one of the best investments you can make at this point. I talked earlier about clients that came in from Denver last week to look at some diamonds, and they also went to look at some antique cars, some classic cars from back, in the 60s and 70s. And the price of the cars were so astronomically high that they were blown away by that. And when I was talking to them about auctions and hard assets, then it made sense to them because when we showed them the auction numbers for diamonds, it resembled what was happening with these classic cars. A car that was supposed to sell for $80,000 sold for $180,000, and again, at first, they had trouble dealing with that, but when they saw the auction results for diamonds, for example, last year, there was a vivid yellow diamond that was supposed to sell for $180,000, and it sold for $960,000. There were many cases last year where diamonds sold for 3 and 4 times what the experts at Christie's and Sotheby's said that these diamonds would sell for. So again, there's a reason why these diamonds and these cars are doing this. It's because of the times that we're in. Most people do not trust paper assets at this time, and all you have to do is go back over the last 5 years and look at how your retirement savings plan has done. If you've actually made money in your retirement savings plan, you're in the 1%, because 90 to 99% of the people that invested their money in stocks for their retirement funds are way behind the 8 ball. And again, it doesn't make any sense to continue to risk that money when there are other investments that could do extremely well for you. When's the last time you made 25% return in 1 year on any investment with no risk? That's what's happening in the diamond market and the rare car markets at this point. Now, we're not in the rare car market. I just wanted to bring that up to you to help you understand what's happening in these type of hard asset markets. And again, it's an unbelievable time, and this is going to continue for a long, long time. This is not an aberration that's going to happen for a few months. This has been going on for years in the diamond markets. So now, again, we recommend very, very highly for those that can handle that type of investment, the D-flawless white market. And another reason why you want to own D-flawless whites is because the only diamond fund that has ever been approved in Europe is selling the D-flawless whites. And there's not enough of them, in my opinion, to make this fund overly successful because you're talking about an asset that is in very, very short supply. So what I'm instructing my clients to do is to own these D-flawless whites because they're going to run out, and they're going to run out very soon, and the prices are going to move to extremely high levels. So I very strongly suggest that you get into this market while you still can. Now, the other diamonds that you want to look at are the Argyle pink diamonds. The Argyle pink diamonds are a phenomenon. They come from the Argyle mine in Australia, in Western Australia, and this mine is about to close. It's going to close by 2018. It's now basically 2013. There's only 5 years to go on this mine. Give it 2 years for these diamonds to run out, and these amazing pink diamonds will increase, in my opinion, 8 to 10 times what today's prices are. 8 to 10 times. That's 800 to 1,000% return on your money. Now, the fact is that this has happened in other diamonds before. This is why we believe that the same scenario is going to happen with these beautiful pinks. The pink diamond market is a very, very small market. If you take all of the pink diamonds that come out of the Argyle mine, it represents 95% of the pink diamonds in the world. It doesn't even fill a champagne glass. It doesn't fill a champagne glass. If you get the newsletter this week, you're going to see the article written by my son Jonathan, was published in a magazine, and they're going to show you the pink diamonds in this champagne flute, and it covers about 3/4 of the champagne glass. That represents 95% of the world's pink diamonds. If you're one of the fortunate few to be able to own one of these diamonds, you're talking about an investment that can return 8 to 10 times your money. Means that if you bought a $50,000 diamond, it could turn into $500,000 in the next 5 to 8 years. If you bought a $100,000 diamond, it could be a 7-figure diamond. It's happened with blue diamonds. It's now happening with pinks. You know, last year we were able to offer vivid pink diamonds that were in the $50,000 range that were about 1/3 of a carat. Now, the diamonds that are under a quarter carat and actually under .20s are selling for $50,000 to $60,000. The price of these diamonds are climbing like crazy. This is one of the best investments that you could ever make. And again, if you don't get into this market, this is something you'll sit back and regret forever. Those of you that have put money away in your retirement savings plan for retirement and realize at this point that the chances of retiring off your stock investments is not going to happen. Many of my clients buy these type of diamonds and put them away for retirement because, again, a diamond that you can buy today for $20,000 could easily be an $80,000 to $100,000 diamond in the next 10 years. If you're in your 30s, 40s, 50s, or 60s and you have not put away enough money for retirement, or the money that's in your RSP is of a concern to you, you want to look at the D-flawless whites, you want to look at the Argyle pinks, and you definitely want to look at the yellow flawless diamonds. They have to be flawless, and they have to be the ones from South Africa, not the cheap ones that are being sold in Toronto that have all those black marks on them. Those are carbon marks, and it's because the diamond is so soft and brittle that it is not considered an investment diamond. It's not resellable. You want to own the highest quality diamonds that you can afford at this particular point, and these yellow flawless diamonds, the fancy light yellows, which are canary diamonds, they start at about $15,000. That diamond in 10 years from now can be a $75,000 diamond. The $20,000 fancy yellow flawlesses of high quality, those diamonds could be $100,000 in the next 10 years. In fact, if we get the inflation that we could get in the next 5 years, it's possible to see those type of moves. So again, most of my clients, along with my family, my children, and my grandchildren, all own these type of diamonds. We're not in stocks. We're not in paper assets. We're not in anything risky because at the end of this year and going into the first quarter of next year, we could see certain markets plummet. And it could be the stock markets. It could be all paper assets. You've got these derivative markets out there that are in the quadrillions of dollars that could wreak havoc on these markets. You need to be in some safe assets. Gold and silver and diamonds do the same thing. They're hedges against inflation and, again, problems with stocks and those type of assets. In fact, again, when you're looking at diamonds, they do the same job as gold and silver without any risk. So we recommend you can get involved in the yellow diamond market starting at $15,000 to $20,000, and again, over the next 5 to 10 years, those markets can go up as much as 4 to 5 times what today's prices are. Go ahead and try to do that in any other market, and these are assets that never, ever fall in price. The Argyle pinks, the mine is definitely going to close before 2018. There are no new diamond mines coming online. There's not been a new mine discovered in the last 15 years that produce any quantity of diamonds whatsoever. And again, you want to get into the Argyle pink market. That's where you could make your fortunes, and the same scenario with these D-flawless whites. Those are the 3 markets that I recommend the strongest. They're in very, very short supply. Get them while you can. And again, these markets will save your financial life and give you capital appreciation as opposed to putting your money in the bank and making absolutely no return because interest rates are at 0.
Connect with Harold, rarecoloreddiamonds.com. rarecoloreddiamonds.com. Harold has clients all over the world. You can connect with him by calling him at 1-800-432-1022, 1-800-432-1022, or rarecoloreddiamonds.com. And Harold, I know that you'll continue to stay in very close touch with all the friends that you've made in the Toronto area, all the clients. Our radio show will continue online for those individuals in Ontario. Really, there are people that listen to our radio show, as Harold knows, all around the world via the internet, via iTunes, and the website goes all around the world, obviously. So you'll be keeping in close contact with all those people in Ontario, Harold.
Well, I'm from Toronto myself, from Ontario, and again, I'm very sad not to be on this particular show. It's been on for 12 years, and we've helped an awful lot of people. But again, things happen, and we are moving on. We do have our shows in Edmonton, Calgary, and then those shows go onto our website, HESradio.com, HESradio.com. We tape the shows every Friday, so right after, later in Friday afternoon, you can go onto your computer, onto your iTunes, onto whatever, and you can listen to the radio show. We've been in business for a long, long time. I've been in this business for 35 years, and again, I'm originally from Toronto. My show has played there for 12 years. We have a lot of great clients and friends there. And again, please continue to listen to our show on the computer, on HES Radio, and on rarecoloreddiamonds.com. Along with that, we'll send you emails and we'll keep you updated as to everything that's happening. There's no way in the world that we would ever abandon our Canadian clients, let alone our clients in Toronto and in Ontario. So again, please continue to listen to the show. The best is by far yet to come. And again, we want to stay in touch with you.
Really, nothing is changing, just the platform. The platform is moving off the radio in Toronto to the internet. And obviously, it's more convenient for you. You can listen anytime you want. You don't have to listen at a set time. Connect with Harold, rarecoloreddiamonds.com, rarecoloreddiamonds.com. Speak to him about the featured diamond of the week. It's a 2.15 round, brilliant cut, D flawless white. And it is absolutely stunning. Have Harold send you the article that his son Jonathan wrote for Luxio magazine on rare-colored diamonds. It has a picture that we had in our newsletter in the past, and it is an amazing picture because it's a flute of a champagne flute, and the goblet is full of pink diamonds. And those pink diamonds represent 95% of the world's annual production of pink diamonds. The champagne flute is full, and that is it for the entire world. Gives you an idea exactly what we're dealing with when it comes to rare colored diamonds, and Harold in particular, pink diamonds.
You bet. And again, the article is right on. It got published in the magazine. I'm very proud of Jonathan. He's doing extremely well. And again, the pink diamond market is just absolutely on fire. We've just invested fortunes into the pink diamond market to make certain that we can keep up the demand for our clients. So again, what you can see on rare colored diamonds at this particular point, if you go to the loose diamond section and go to the pink diamonds, you're going to see the fancy pinks, the fancy intense, and the fancy vivids. Look at the videos of those diamonds. They'll literally take your breath away. And again, what you're going to see within the very near future is our new supply of pink diamonds coming in from the first 2 quarters, or for the last 2 quarters from Argyle. So again, we've literally put 8 figures into the pink diamond market, and there's a very strong reason for it. It's one of the best investments that you could possibly make. There's no risk to it. And again, how often do you get to take advantage of a supply and demand situation where the demand for pink diamonds is skyrocketing all around the world, and the supplies are at the lowest levels they've ever been? It's one of the most exciting opportunities I've ever seen.
RareColoredDiamonds.com, RareColoredDiamonds.com. The telephone number, 1-800-432-1022. Connect with Worldwide Precious Metals, the only company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium. WWPMC.com. Their telephone number, 1-866-623-2002. You can get our free weekly newsletter from Harold or Worldwide. Some of the stories in our newsletter this week. Most accurate forecaster sees lethargic U.S. expansion. Joshua Shapiro, chief U.S. economist at New York-based forecasting firm Maria Fiorini Ramirez, he and his firm have been among the most pessimistic forecasters of a U.S. recovery. They see that to continue, and they think that what's going to be happening in the United States is going to be very difficult times going into 2013. Also, Bill Gross from PIMCO coming out and saying that structural headwinds may drop growth below 2%. Bill Gross with PIMCO, one of the world's hugest bond fund companies. Also, Rich Yamarone, he is with Bloomberg. He was interviewed by King World News, and he said the collapse is getting even worse. The fiscal cliff actually doesn't seem to be at all that problematic. What is problematic is just that the economy is slowing, and people are not coming to stores. He speaks all over the United States on behalf of Bloomberg, and small retailers are saying to him when he speaks to different crowds at different events that people are not coming into stores. A lot of business is being done on the Internet. He'll speak at a Chamber of Commerce event and talk about how bad the economy is, and people won't put up their hand and agree or disagree or ask questions, but later they will come up and say, hey, you know what, I agree with you. In fact, he said so many people are coming up to him right now and saying, you're 100% right. This economy is much weaker than anybody in the press is letting you know and leading you to believe. And he goes on to say that quite a few people, business owners, have come up to him and saying, you know, I didn't want to say anything in this meeting because I have competitors in the audience. I don't want them to know that my business, which has been around for 3 generations in the family, is going to be shutting its doors after Christmas. It's embarrassing to the family. And he said that is a very, very powerful statement of what is going on in the United States. Harold, there seems to be a lot of cheerleading as to the economic numbers in the U.S. I'm not a firm believer they are accurate. One thing I am a believer in is that really ultimately hard assets will do well based on monetary policy. And there were some interviews I saw on Bloomberg during the week with some top financial minds, and they said monetary policy in the EU is going to stay the same with low interest rates and lots of financial easing, monetary easing, the same for the United States. Until that changes, the hard asset market will continue to do very, very well. And we have about 3 minutes left here.
Well, you're 100% right, Randy. You know, I'm a Canadian living in the U.S., and the fact is that that's what everybody talks about, is how bad the economy is. So, again, they can support the stock market. They can come out with numbers that just don't make any sense and revise them when nobody's looking type of thing. But the bottom line is that the direction that they're heading in, unfortunately, has never worked in the past, so I don't see why they think it's going to work now. In fact, a lot of the things that the U.S. is doing right now, Japan has already tried, and Japan's been in a recession for the last decade. So the fact is that what's happening and what they're doing is not solving what the problem is. And what really needs to be done is that they need to really start to attack and bite the bullet, actually, and say, listen, we understand that the economy is regressing, and here's what we need to do, which is basically raise interest rates, strengthen the currency, and that type of thing in order to get the economy back on track. But they'll never do that, because at this point they're going to keep interest rates at zero for the next 3 to 4 years, which is going to reduce the value of the dollar, and it's not going to help the economy. The small business owner is getting killed here. And the fact is that will continue. So I don't see things improving in the U.S. at all. I certainly don't think that things are going to improve in Europe. And all we're going to do is see massive printing of dollars, which is going to bring on high inflation, which is why we're in the diamond and gold and silver business, because that's the markets that will respond to high inflation and currency devaluation.
Thank you very much, Harold Siegel, for another fantastic show.
Well, it's my pleasure. I wish everybody a wonderful weekend and a very profitable day. And again, I just want to take this opportunity to say after 12 years of being, on the Toronto station, that we're going to take a break from that station. And again, I just want to thank all of our Toronto and our Canadian listeners in Ontario for all of your patronage and your support. We truly appreciate it.
And we're just going on to another platform. We're going away from the radio station to online. Connect with us at rarecoloreddiamonds.com, HESradio.com. The shows are there. You can listen to them anytime you want. You can listen to them on your iPad, your iPhone, your computer, through iTunes. We have you covered. It's just the platform that is changing due to circumstances beyond our control. Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022. Learn about investing in diamonds. And on the hard asset market continues with gold, silver, platinum, palladium. The company Harold recommends you use Worldwide Precious Metals, wwpmc.com. Their telephone number, 1-866-623-2002. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.